Welcome back to Wall Street. Forbes media chairman Steve Forbes, my special guest this weekend. And Steve, we have a big second half to look forward to. President Trump is going to meet with Vladimir Putin on July 16th in Helsinki. Your thoughts on this upcoming meeting?
This is going to be a crucial meeting because the Europeans are going to be watching it very closely. Is the U.S. in effect going to abandon 70 years of post-war policy with Europe by in effect gutting NATO and saying Europe's on its own? That would have huge international repercussions. So what they discuss, and I think what Putin's going to try to do with Trump is say, hey, start abandoning NATO, and by golly, we can have a better relationship. And that's what the Europeans are deadly, especially the Germans, are really worried about.
Well, the president continues to say that NATO partners do not pay their fair share in terms of their military protection.
Some of them are starting to and having pressure on them to boost it. Everyone knows it. Henry Kissinger says NATO needs to be updated in that respect.
Okay.
But the core should be NATO exists because it helps our security by having the security on the perimeter. That's why it was created, to stop the Soviets after World War II, keep the peace there, keep Europe out of diplomacy, keep the Germans happy, and because their security is our security. We learned that in the 30s. So this is not just us doing a security service for them. It's for our safety as well.
All right, let's talk economics here. We've had a good performance. Now we're talking about a very strong second quarter. We will get the GDP out in the next couple of weeks. A lot of people talking about 4% now, Steve. What's your expectation for the second quarter and the second half of the year in terms of economic activity?
Yeah, well, we've been so beaten down that 3.5%, 4%, which would have been seen as the norm a generation ago, now we break out the fireworks. And it's a good thing to finally break out of that rut of 10 years. And that's, again, why the Federal Reserve cannot go engage in this talk about dampening down the economy. Got to get these trade agreements out of the way. And you'll see this economy take off. You're starting to see investment move up. You're starting to see new business creation. IPOs are starting to boom again. We're starting to get a real normal, which is a good economy. But don't trade stands in a way of it. The Fed could stand in a way of it. Get those out of the way, and by golly, it's going to be great.
Well, what about the Fed? Because they're basically saying that they're going to raise interest rates a total of 4 times this year. I don't know if 4 is one too many. How do you feel about this? This is an unprecedented situation that the Fed faces, where you've got an economy that's growing. They're beginning an interest rate rising period, and they're also having to unwind this $4.5 trillion balance sheet, which we've never seen them do before.
Unwinding is not a bad thing because it means less power for the Fed, which is a good thing.
Okay.
Those resources should be in the economy. That money should be with the banks lending out those reserves instead of rotting inside the Fed. So that would be a good thing. On interest rates, if it just means having more market set rates, that's a good thing. But the key thing is not so much the interest rates. It's what the Feds are starting to signal to the banks. Pull back on lending. The economy's getting overheated. I wish somebody would tell the Fed, the economy is made up of 330 million people in this country, 7 billion around the world. It's people. Do people, when they start to do better, overheat? If you get a pay raise, do you feel you're overheating and you must, you know, it's crazy.
I like the heat of the pay raise.
It's crazy.
Yeah.
The idea that the economy is a machine, preposterous.
But
step back and leave it alone.
So do you think they're going to do that? I mean, are they going to just keep with this program of 4 rate hikes?
I think they're starting to feel that they've got the economy may be overheating or getting, as they think it, too prosperous. And they may try to slow it down. Not so much through interest rates. That's already been signaled by in effect telling lenders, we're watching what you're doing.
Wow.
Tony Soprano approach.
Yeah, well, let me ask you, because there is a narrative going on that the consumer slows down in the next couple of years because of higher interest rates, because of some inflationary forces that we're seeing. You know, some commodities are up in price. Do you think we have to worry about the consumer slowing down going into the midterm elections?
Midterm, if we don't get these trade agreements, some of them out of the way in the Midwest, yeah, that's going to hurt the Republicans. But longer term, if the economy really starts to do well and people feel for the first time in memory that things are really getting better, that this is not just a flash in the pan, but this is for real, you don't have to worry about the consumer. Or the investor.
Stock market this past half a year really flat to down. What's your take on the next performance for the stock market for the rest of the year?
Watch those trade agreements. You get good trade agreements.
All about trade.
Boom. Market zooms because the economy, earnings are going to be going up, investing's going up, and Tax cut 2.0. The president's made reference to it. Why the congressional Republicans aren't saying we need a tax cut on the table, like cutting capital gains tax, cutting personal tax rates, have something people can look forward to after the election? I don't know what's going through these people's minds
politically. Well, they're going to do it. In my interview with the president, he made some news on a number of fronts. Yeah. In particular, he said that they are considering lowering the corporate rate from 21% to 20%. So that would be a huge move, down from 35% before this tax reform.
But the Republicans should go on the personal side, too.
Yes. He said it's going to be a lot about the middle class away from that.
Yeah. So do it across. But why isn't Ryan and the House Republicans starting saying, we know it can't get through the Senate because of whatever, but let's have it on the table. So if we do better in these elections, this is what you're going to get for Christmas.
Yeah.
Advance Christmas present.
Maybe that's the strategy. Maybe they do this in October, right before the midterms.
That's where they should listen to the president. The president has a better understanding of these things, codified by the fact that they were talking about tax reform, the Republicans. The president called tax cuts.
Yeah.
People don't know what tax reform means.
You're right.
Tax cuts they get. He understands communications.
He certainly has great instincts when it comes to the American people. Yeah. Steve, it's good to see you. Thanks so much for joining us. Love having your instincts. Steve Forbes joining us.